Hey everybody, good to be here today. Happy Friday. And another week has passed. Wow, time flies. Hey, I'm glad to be with you. My name is Brent Moores, and we do condors, calendars, and butterflies each week, and sometimes some other types of trades, all kind of in the general theme of more advanced options, multi-leg option strategies, though. So glad you're here. Glad to be joined by James Boyd, helping me on the chat. Appreciate James. Of course, make sure you check out his Investing Master Series, and that's on Tuesdays, 11 o'clock Eastern time. It's also archived, just like almost all of our webcasts are archived. Not all, almost all. You can follow us on X at Brent Moore CS, at James Boyd CS for additional content throughout the week. And there we go. I also, by the way, I teach a managing an options portfolio webcast where a lot of times the trades that we enter in this webcast, we actually manage in that webcast. That webcast is on Wednesdays at noon Eastern time. Hey, let's go through some disclosures here so we can get started. Options do carry a high level of risk and are not suitable for all investors. The material today is intended for general informational purposes only and educational purposes only. With long options, investors may lose 100% of the funds invested. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. And the paper money software application is provided for educational purposes only. It does not assign short options early, though. That's different than your real account, which would do that. All investing involves risk, including potential loss of principal. There's no guarantee of an execution of a stop order, that it will be at or near the stop price. And we'll go through individual stocks today. They're not recommendations. They're for illustrative purposes only. Probability analysis results are theoretical in nature. Past performance is no guarantee of future results, and Schwab does not recommend the use of technical analysis as the sole means of investment research. Nice little bounce today. And this is on the SPX, by the way. You can see we've dipped. This is a 20 and 50-day moving average. We're below that. We went below that 50-day, but once again, we've recovered. I don't know where it's going to go from here, but a lot of times we'll use things like the 50-day moving average, for example, to try and help us assess trend. And that trend, I could go back further, but I'm not going to, was a pretty strong trend, kind of flattening out a little bit maybe now. But, sometimes breaking that 50-day moving average can be kind of a red flag or a warning sign, yellow flag, maybe, I don't know. But we often look at how the market responds after that. Well, today, up 1.7%. And you can see that reflected if we were to go to the Market Watch tab. This is the heat map. Here's technology. Nice green. This is the change today. Technology, which is a huge sector, largest sector, and really can push the market. And that's been, even though a lot of the rest of the market has been hanging in there pretty well, IT hasn't been, and that's why we saw one of the main reasons we saw the SPX drop. Okay, so let's talk about something here. What I want to talk about is screening or scanning or searching. You can call it what you want for iron condor trades. Okay, I'm going to use a scan tab here, but keep in mind, you don't need to build a new scan every time you're going to search for something. And I know I say this very often. If you create a scan and you save the scan, it is then going to be a watch list. Okay, and we can use that watch list. We can use that watch list going forward, but we're going to start with the scan. And so I'm going to start with the scan here, and then we're going to look at some individual trades. So I'm going to go to the scan tab. I'm going to go to Stock Hacker, and keep in mind, if you're an options trader, more often than not, most options traders start with looking at the underlying stock, and they don't start by looking at the option itself. Okay. But what I'm going to do here is this. I'm going to clear out, and we're going to start from scratch here. And one of the things, it doesn't matter what type of trader you are, is we're going to look and liquidity is going to be a key factor. So I'm just going to narrow this down right away to the S&P 100 stocks, okay? Basically, the 100 largest stocks out there. Doesn't guarantee all the options on those stocks are going to be liquid, but it's probably a good start. And I'm going to intersect this with penny increment options. This is, I think, combining these two together are going to tend to give you quite liquid stocks. Again, you got to check options on an individual basis, but there's our start. In fact, if I were just to scan from there, we've got 83 results here. Okay, 83 results. But here's the thing. If we're scanning for an iron condor, what kind of stocks do we want? Do we want stocks that are likely to go up, likely to go down, or likely to go kind of more or less sideways? And the answer is more or less sideways. Now, of course, we can't predict with, we don't know for sure. But how can we decide? Well, the way we're going to focus on this is through technical analysis. In other words, we want the main principles. The first things we look at with technical analysis are, I'd say number one is probably trend. That's kind of a key thing, trend, and support and resistance. Okay, those are kind of the two biggest things. Now, there's other things. You can look at momentum and other indicators and stuff like that, but I'm going to consider those are the two biggies. If a stock is not trending, that is probably a better condition for a more neutral stock. Iron condors, we want more of a neutral-ish stock. It's more of a neutralist strategy. So this scan that we're going to go through is probably going to be pretty applicable to some other possible neutral strategies you can look at as well. But today we're focusing on iron condors. Similarly, if we're not trending, it's more likely we're going to see clear levels of support and resistance. Maybe a channel, right? I mean, if something's just been trending up, you may not see much in the way of resistance up there. Maybe we're at a 52-week high or something like that. So there we go. Now, here's the crux. Here's the deal. We want it sideways stock, but ideally we'd like something where implied volatility may be higher but more likely to drop. Okay? So in that situation, what I want to do is I want to avoid earnings. You don't have to. Sometimes we intentionally target earnings. In fact, we did that 2-3 weeks ago in this webcast. We did iron condors and intentionally targeting earnings. That's not what we're going to do today. Because on earnings, we're more likely to get a bigger move in the underlying stock. No guarantee, but more likely. And so I'm going to try and avoid that. Furthermore, leading up to earnings, we see implied volatilities increase here on that. So let's run the scan here. Okay, let's run the scan and just kind of continue with this. S&P 100 penny increment options. I'm going to use a study. Okay, I'm going to use a study. Let's just pull up a stock and let me do. I just saw CRM. Okay, here's Salesforce. There's a study I want to just point out to you today, and it's called the ADX. Okay, what's the ADX? ADX is a trend indicator. So if ADX is high, here's an example of a high ADX. Up near 40 is a high ADX. Up near 30 is probably a pretty high ADX. That's an indication of a stock that's trending. Doesn't matter whether it's trending up or down, in this case, down, but that ADX is going up. So a simple way to look for stocks that are not trending is to look for ones with a lower ADX. Back here, it wasn't really going very far. Where was our ADX? It was in the teens. It's an easy way to do it. And so we're going to kind of try and exploit that in the scan. So I'm going to add a filter, and I'm going to add a study filter. Now that study filter is only going to work in live trading. Okay, it only works in live trading. So just be aware of that. If you're trying to do this in your paper money, it's not going to work. But I'm going to go to custom. It brings up another window, and it kind of gives me this, but that's not actually what I want. What I want is I want to add I want to add a study. And the study is ADX, okay? And so I'm adding ADX. And I want ADX to be less than, and I'm just going to pick a value, and I'm going to make it 20. By the way, I'll share this scan with you once we're done, once I've saved it. And I'm going to make it less than 20. Now, 20 is not the lowest. We can certainly find things that are lower than 15, maybe even 10. I don't know. That'd be very low, by the way. But it's okay if we get a few more results there. I wouldn't, if I'm looking for something that's trending, maybe I'd use 30, above 30. Here, we're looking for less than 20. And I'm just going to click on save on that. Okay, I'm going to click on OK. And now we have that filter. Okay. So there we go. Here's the other thing. I already mentioned, I don't want earnings. I'm going to do this. I'm going to click on add filter. I'm going to go to study, and I'm going to go to corporate actions. Corporate actions, earnings. Here it says earnings. It has earnings. Well, I don't want it. I don't want, it does not have earnings. Does not have earnings. Anytime in the next, I'm going to put 20 bars. Okay. So that's roughly a month. Next 20 bars. Now you're going, Brent, I learned that whole 30 days, half September, April, June, and November thing a long time ago. That's not a month. Well, this is trading days, right? We don't trade on weekends. So roughly, I think it's probably 21 is probably closer, but we're going to say we don't want any earnings for a little while, for the next 20 bars. And I'm going to search this. And I've got 10 results here. Now, these are stocks that presumably aren't trending much. John says, are you trying to find one going sideways? Yes, I'm trying to find one going sideways. We're looking for iron condors. We want a stock to go in sideways. Absolutely. Now, there's another thing that some of you are thinking. You're thinking, well, we want that IV to maybe, hopefully, be high and going down. Is that possible? Well, first of all, I don't want earnings. You can see this right here. We don't have earnings here. If you had that little, it would be like a little red, I can't remember what it is, a red phone or something like that. That would be earnings. We don't have earnings. We know that because we just said earnings. We don't have earnings. So, but what I've done is I've added in a column, an IV percentile column. It says IV percentile. Technically, it's an IV rank, but that's it. They're going to do essentially similar things of what we want. I'm going to look. So I added this column. How do you get that column in? Click on the gear, click on customize, and you can add your column in. It's alphabetical, IV percentile. You have it. You'll see it there. Okay. So there it is. Now you may be saying, Brent, you could have added that in as another filter. I could have. Yes, I could have. And there's nothing wrong with that. The only thing is sometimes it's hard to know what number to put. Like, here's some numbers. They all seem pretty low. I mean, theoretically, they could be 100 or 80 or 70. Notice everything here is a little bit lower. Well, that's largely because if you go to a year chart on these things, most of them had very high IV points, IV, or before earnings, they had a high IV points. So our IV is not going to be super high. So rather than try and decide exactly what number to put, I just ran it without it, and then I added the column. Then you can sort by any of these, and I've just sorted by this column. If I want to sort by a different column, you can just click on the column header and you sort it. But anyway, I'm going to start with the higher IVs. Let's look at Nike here. Okay, let's look at Nike and see what we got. Here's Nike. And by the way, here's your ADX, and you can see Nike more or less going sideways. Now, your results, there's maybe some you don't like. Okay, in fact, I saw one on there that I think we may not like. Okay, let's look at a couple others. IBM. Okay, IBM. Here's IBM, kind of sideways. All right. Past earnings. Here's your ADX. It's about 13, 14, something like that. What was the next one? Amazon. This is the one I think may not like fit our profile of sideways. You see what Amazon, they had earnings, right? A lot of you are probably aware they had earnings, and the market didn't like the earnings. So there we go. Why is the ADX so low then? How did it meet our parameters? Well, it met our parameters. You can see ADX was pretty low. It was kind of going more or less sideways, but it just dropped significantly, and the ADX hasn't really caught up that much yet. I'd expect this ADX would probably continue to go higher. So whatever your results are on your scan, don't take it as necessarily it's going to be sideways. You'll see some exceptions to that, there's no doubt. I'm going to share this. Okay, we're going to call this neutral ADX scan, whatever. Okay, so I'm going to share, and what I will do is, why did that not pop up? Okay, I'm reconnecting here. That's not ideal. One sec. I'm going to have to close. Oh, connected. Okay, well, let's see if we can. Oh, there we go. Now it's popping up. Just had a little hiccup there on that. I'm going to throw that in the chat for those of you who are watching live. And for those of you who are not watching live, I will add it to the description after this webcast. And then you can have it if you want. If you want. If you don't like it, you don't like it. You can tweak it too. But here's the point. When we're looking at this stock, go back to the first one on our list, which was Nike. Nike, we have a nice kind of sideways motion. That's what we want. What about our implied volatility? Here's our implied volatility. It's kind of high. Hopefully, it declines a little bit here going forward. It seems like it peaked out. I don't know. That's always uncertain what IV is going to do, but you can see it did pick out that higher IV. Okay. Now, there's a good question. How long are we doing this chat? How long are we doing this this trade for? Well, that's where technical analysis may come in. How long do you think it's going to last? If you have more confidence, you may go out farther in time. If you're like, I don't know, I'm good for maybe a couple weeks or something, then maybe you're not going to go out so far in time. Let's look at Nike, and let's go out a couple weeks here. Okay, so we got 14 days, and I've got about roughly a $3.50 move. That's an implied move based on the implied volatility on this. $3.50 move. Well, where does $3.50 go? Well, we're about 63.5, we'll say 63.5 just for our purposes. That's going to give me about 67 on that side and about 60. 67 and 60. So in other words, we're looking roughly, I realize this is kind of a rough calculation, roughly kind of there and roughly kind of there. That's where we want it to stay in. Now, this is relatively narrow. I don't think I'd be willing to say this is going to stay in this channel for a month, but maybe, 10 days, that's a possibility. Let's look at the strikes, okay? Another way to do it, this is kind of using technical analysis, right? This is kind of the channel. We had a bounce right here, right? This was potentially a support level right here, potentially a resistance level right here. And so if it breaks resistance, it's certainly possible, we'll probably bust through the call side on this, okay? If it breaks support, we're breaking support. That certainly can happen. But right now, we're gonna say we're good for a shorter term trade. We're good for a shorter term trade here. Now, another approach that people take on this, other than the technical analysis, is they'll use delta. They'll say, hey, look, delta is going to give me how much the option is going to move in relationship to a $1 move in the stock price, but it's also going to kind of give me a probability. And very often for iron condors, our short strikes, we're going to look for a delta somewhere in the range of 20-ish, something like that. Okay. And so let's go and let's go to the call side. Remember, an iron condor is a short call vertical and a short put vertical. On the call side, we said about $67. Our delta, it's a little bit higher than that 20 level. We can go down to the 67.50 or something, but I'm going to keep this with 67, and I'm just going to click on the bid price. Okay. I'm going to go down. I'm just going to make it a $1 anchor. I'm going to go to the 68, and I'm going to do a control click on the ask price. That's a short call vertical. I'm going to do the same thing on the other side with the puts. We said $60 on the puts. Here's $60. Our delta, it's a little bit below the 20 here on this. We're giving us a little more space here on the put side if we were to do this one. I'm going to hold down my control key, click on it. And finally, I'm going to go down $1, go to my ask price, hold down my control key. There's my iron condor. Okay. There is my iron condor. 31-cent credit. Okay. Now, of course, this is one contract. We can increase the number of contracts. Let's look at this. Let's analyze this trade. Here's an iron con. That's what it looks like. Okay, that's what it looks like. Notice, we risk more than we potentially gain on this. In fact, let me just mention something here. I want to address some questions. We'll address those in just one sec. Let me just make sure. Today is the 6th. I'm clicking on the wrong thing. Let's set slices to break even. Okay. All right. So, hey, if you don't think this stock is going to stay neutral, it may not make any sense to do this trade here, right? Because just from the pure probability standpoint, we're just a little bit above 50% in terms of this. Now, presumably we'll get some benefit if the implied volatility drops as well. Okay? So let's go and let me just address some questions. Why did we pick up Nike? We're choosing Nike because it's our forecast is neutral here on this. That's why. We want a positive theta trade. Let me just add a slice here. Positive theta trade. There's our theta right there. Okay. Negative vega. We want the stock to potentially, the implied volatility to drop on that stock. Now, Tegan said, 31 cents, that's not, no, you're right. That's not a lot. That's not a lot. We can always up the credit, right? Just realize if you up the credit by up the contracts, let's say we do 3 contracts, we're upping the risk as well as upping the potential reward too on this. The max gain on the iron condor is the initial credit there. Okay. So there you go. John says, lower the delta. We can lower the delta. You can tweak these if you want. You can certainly tweak these. You push them in closer, you're going to get more credit. However, your probabilities go down. If we lower the strike if we widen the strikes out, we're going to increase the probability, but our reward to risk is going to go worse. Okay. So there we go. So that's that. Let me go and I'm going to increase the number of contracts. And actually, I'm just going to go to the trade tab and we'll do it there. Okay. We're going to do 4 contracts. That's the mid price. I'm going to move it down a little bit, see if we can get filled here. confirm and send. I'm going to go to iron condors. And then I want to talk about management. How are we going to manage this? We filled. Okay. So here's our Nike trade. And we'll follow this up in our managing options portfolio class as well. But let's kind of think about this for a sec here in terms of managing this. Let's say Nike goes up. Boom. What's going to happen to the put side of the equation? Remember, we got a short put vertical down here. We got a short call vertical up here. What's going to happen to the put side? Well, it's going to look great. So if it starts to go up, we're probably going to look to close out the short put vertical. You're going to manage these separately. Just because we entered them together doesn't mean we need to manage them together. Short put vertical will close out. That's what we call managing the winners. Okay. Now, one other thing I should mention as well is I didn't factor in commissions. There are commissions, there are fees that you should be aware of on this. And so that's one thing. Now, what if it does go up? What's going to be happening to the call side? Well, the call side's not going to be looking so hot, right? It's going to be hurting. But if we're going to close out the put side at that point, capture some gain on that, and this won't be looking good. But hopefully what happens is if it moves up, hopefully it retraces. If it moves up, hopefully it retraces. If it moves up, it hopefully retraces. Now, sometimes it doesn't. Sometimes it goes down. Let's say it went down and you're hoping for it to retrace. No, it just kept on going down, okay, a long while before it retraced. That happens too. But we're going to be a little bit more patient on that call side probably in terms of management if it goes up, for the thought that if you look at most stocks, they kind of go up and then they go down, or they go down and then they go up. They don't just go up forever, especially on something that's not trending. Okay. So that's the challenge on this. Now, some people don't love iron condors. Iron condors aren't big money gainers, right? If you want something that's a bigger money gainer, you're probably not going to do an iron condor. But there you go. That's the trade right there you have on that. That is an iron condor. That's how you can search for an iron condor. Now, you can tweak the strikes if you want, get more premium if you want, but just realize the consequences that's going to have on your overall return. That's only a 2-week iron condor. So it's not, one nice thing is theta is nice and high at this point with only 2 weeks to go to expiration. But the total amount of credit isn't going to be massive on this because there's only 2 weeks till expiration. Let's go to another one. Scan. Oh, by the way, here's what I'm going to do. I'm going to save this scan query, and we're going to name this, forgot what I called it before, neutral ADX, okay? So we're going to click on save, and then once it's saved, I can go over here, and I can, then if I wanted to, I could choose personal. I should have neutral ADX in there now somewhere. There it is, neutral ADX, and I'll see my stocks listed right there. If I wanted to, I could add that same column that we had over there on this, and why that disappears. Let me sort this again. Let's look at the next one, IBM. Let's tweak this one a little bit though. We're going to go out a little further on IBM, okay? Instead of, because I think this was relatively neutral, we're going to call this relatively neutral, okay? We're past earnings, kind of neutral, kind of, probably some support down here. We just had a bounce down here. Probably some resistance up here. And we can do the same thing. We can look, if we want, at, here's 14 days out. Maybe we don't go 14. Maybe we go out farther. Maybe we go out 28 days. You got to be a little bit more careful about liquidity on these, though. For example, if we look, let me go to my open interest. Here's my open interest on these. How's the open interest? it's okay, not great, could be worse. More so than the open interest, though. What are my bid-ask spreads looking like? 90 cents? That's a challenge. $1.60? That's not acceptable. Okay. No matter what the open interest is, if I'm seeing spreads like that, that's not going to work. Now, so what I'm going to do, I'm going to go out to the monthly contracts. Okay. I'm going to go out to the monthly contracts and see, well, open interest is looking a little better there, isn't it? Okay. It is looking a lot better. Spreads, looking substantially better. That, by the way, is very typical. Okay. Weekly contracts are typically going to have much less liquidity than monthly contracts. So if it's iffy, it may not make a difference if you're trading Apple or Microsoft, something that's super highly traded. IBM's not, I mean, it's not an insignificant stock, but it on this type of stock, it can certainly make a difference. Okay. All right. Let's go here. Let me go and let's look at what we got. Okay. About a $26. It's an expensive stock. Roughly a $26 market maker move out 42 days. So this is going out longer. $26. Well, what's $26 plus 298? It's about 324-ish. That's going to put it up in that range. Okay. And $26, this is about 272. It's going to put it roughly down in this range. Okay. So this is the range from there to there where we want this to stay in. Okay. We're going to have more time. It'll bring in more credit because of the more time, but we're also out wider on this. Okay. So let's go and let's look at it. Let's go to trade. And hold on, let me just refresh myself. We said up about 325, down about 270-ish. Let me pull my delta here on these. Here's my delta. Again, I'm going to go to something out about the 20-ish delta. We said 325. I think that works right about there. I'm going to sell this one, and I'll answer some questions here in just a minute. Control key. I'm going to go over here. I'm going to go again down to roughly my 20 delta. I'm going to hold down my control key, sell that, and click on my ask price. There we go. Okay, let's analyze this trade. Here we go. And I've got that there. Let's get rid of this column. And there we go. Okay, so that's the trade right there. Let me just scrunch that in a little bit. That's where we want. And let's tackle a few questions here before we go this. Could you show a trade where you close one of these trades? So many legs. Okay, you can close when you get out of these. You can get out one leg at a time. You can get out the short vertical, one short vertical at a time, or you can get out of the whole shebang. Typically, exiting on these, we're probably looking, and you'll know this if you've been to the Managing Options portfolio class on Wednesdays. Typically, what you'll see is we get out probably at a vertical spread at a time on this. If you decide you want to get out of one of these early, I'm not going to get out of it right now, but if I wanted to get out of one of these early, let's go to Nike and say, hey, I decided I don't want to do this trade. Just simply highlight. You can hold down your control key and highlight the contracts you want to get out of. Right click on it, create closing order, and look, it's a vertical to get out of the put spread here. Okay, I could do that right now. I just click on that, it would bring up the order. I'm not going to send that right now, but that's how you can do that. All right. So let's say you don't like iron condors. A lot of people don't like iron condors. Could you use this for a butterfly spread as well? Well, let's think about butterflies. Butterflies, do you want the stock to go up? Do you want it to go down? Do you want it to go more neutral? Oh, more neutral, okay. Butterflies, do you want your implied volatilities to go up, or do you want them to go down? Well, you want them to go down. Butterflies and iron condors are quite similar in that regard. So this scan, you could use just as well for a butterfly spread if you wanted to on that. Okay, so here's the trade. Let me just go current price. Here's current price. There's our theta. This is all about adding positive theta to the portfolio. If I go here and I pull up, what happened to my, one sec. Oh, it's supposed to be on IBM right now. Okay, here's IBM. Let's see if we got this. Do I still have my trade? I don't have my trade anymore. It went away on me. Okay, let's add it in real quick. We did a 330, 325, I think, 325. We sold that. We bought the 330. We sold the 275. And we bought the 270. Okay. More of a credit, okay? $5 spread. If you want to figure out, by the way, like what's your return on risk on this, well, you can divide the max profit by the max loss. 174 is probably a little bit higher than we're realistically going to get on this. Let me push this down a little bit. Okay. But if I take my max profit, 151, divided by 349, I come up with about 43% return on risk if that were to fill there. Let me throw this in and enter that trade. Okay, a little longer term. More potential time decay, more potential credit, more time for it to go against us though. This one isn't a 2-week trade. This one's longer. We're not going to let it go all the way to expiration either. Okay, we're going to get out with that about a week to go, typically till expiration. Now, if I'm starting out with 42 days and things are going okay, and I haven't made a max gain or anything or close to a max gain, maybe I'll get out once we get under 10 days. If I'm starting with 14 days to go to expiration, I'm probably not going to get out with 9 or 8 days to go. I'll probably let it run a little bit more, but we're probably not going to hold it to 1 or 2 days before expiration on these. Okay. Now, this is obviously not the only way to do it. Can you do iron condors on indexes? Yeah, we started off the webcast looking at the SPX. Potential support on the SPX, probably about there. We've said it's been, we had the nice trend. It's kind of maybe flattening out a little bit. I'm going to call that kind of a resistance level there. We're kind of mid-zone right now on this. If you're mid-zone, you can certainly do them both. By the way, if you're kind of neutral-ish, but let's say we were looking at this yesterday and the stock were down here. What you may do is you may enter the short put vertical and wait for the stock to bounce up. And then if it gets near resistance, then enter a short call vertical. You're entering a vertical one at a time. And ultimately you end up, when all is said and done, with an iron condor. That's legging into an iron condor. That's absolutely fine. So there we go. All right. Let's go and just look. Here's our trade tab. SPX, a lot of potential expirations on the SPX, right? And we're seeing more expirations on other stocks too. A lot of those Mag 7 stocks are starting to get more expirations. Doesn't matter, just make sure that you know when it's expiring and make sure they seem liquid enough to you. So I can go out. Now, they do have these kind of monthly expirations as well, which you can look at. Or you can go out weekly. And here's a monthly expiration, only 13 days away. You can go out further, but double check, make sure that your spreads are relatively tight, and they are. Typically on the SPX is very heavily traded, so your spreads are going to be reasonable on those typically, but just double check them. Can be kind of expensive, right? We're talking about 68.90, 6,900. These, unlike contracts on those last two examples we did, this cannot be assigned early. This is a European style index option. It cannot be assigned early. Other than that, I'm going to use similar rules here on this. I'm going to go to my delta, somewhere around the 20 delta probably, and I'm going to go 66.80. I'm going to sell that. I'll go to 66.70. I'm going to buy that. That's my put side. On my call side, I'm going to do similar. I'm going to go to about my 20 delta. I'm going to hold down my control key and hold down my control key. That is an iron condor on an index. Just move this down a little bit so you can see it. Just be aware of your max loss. About $610. We're probably not going to let it go all the way to expiration, but that's how you can do that. You can always figure it out and decide, what's your reward, what's your risk on this. You only do this if you are neutral. Iron condor is a trade for neutral. This scan that we did is intended to find more neutral stocks. It's no guarantee there, okay? Confirm and send. And I'm going to go to iron condor and put that in, okay? So now we have an iron condor on the SPX. We will manage these in that managing options portfolio class on Wednesdays. I want to thank James for helping me on the chat today. I appreciate you. I want to thank you for your questions, everybody, and your participation, and for joining me. Coming up next, we have market and sector analysis. And just a reminder, this webcast, we talked about scanning for iron condors, but this scan that we did that I shared with you, that I'm going to put in the description as well, can be used not just for iron condors. You could probably use it equally well for other neutral type strategies. So if you want to find neutral type stocks, consider that. You don't have to look at it that way, but that's certainly one approach. Everybody have a nice weekend. Thank you very much for joining me, and we'll see you all same time next week. Bye-bye, everybody.